PPC has reported higher full-year earnings, this as cost improvement initiatives in its turnaround strategy paid off. The cement producer says its view of the macroeconomic environment remains positive and it expects steady and slow improvements in the coming years. Earlier, I caught up with CEO Matias Cardarelli for greater insight into that performance.
Well, South Africa, if you are talking about particularly the South African market, we have seen a muted market for already more than 10 years.
Yeah.
I mean, we haven't seen a construction sector improving, and so we are not seeing volumes from the cement industry increasing. The market nowadays is around 13 million tons of cement, and has been like that with slightly changes, but mostly the same for already more than 10 years.
Yeah.
And that is why when we came to PPC, because we are a new management team that came to the company a little bit more than 1 year ago, we built that plan not based on just waiting for the economy to improve or for the market to come back. So we built that, we built up a plan at the time, we call it Awaken the Giant, for the obvious reason of how important PPC has been for the construction sector in South Africa and in the region for years. And we built the whole plan trying to unlock internal value. When you are seeing the results today, you will see that even our volumes drop a little bit, and our revenue only increased slightly 2.3%.
Yeah.
All the results that you are seeing today, the big jump in terms of EBITDA margin of 4.4 percentage points, the huge increase of 28% in EBITDA, the 300% improvement in cash flow, all of them are coming from internal opportunities that we found when we came and we started to fix.
Yeah, well, let's get into those because really PPC has been doing the work to strengthen its business internally, and we're starting to see the fruits of the execution there. What has been key to getting things right in your different markets? Because I even saw that in Zimbabwe, even though you did have a volume and revenue increase, but we did have some metrics that displayed record results there.
Yeah, actually in Zimbabwe we improved 6 percentage point EBITDA margin, 4% in the group, but 60 in Zimbabwe. I would say that all start from the beginning. You need to have the right team, first of all. So we have built in a high-performance team, and we have recruited very talented people from the market. And that we started a process of reshifting our organizational culture.
Okay.
What I mean that after years of results deteriorating in PPC, there was some kind of a skepticism about the possibility of PPC recovering. And part of that generate a kind of complacent organizational culture that was only waiting for the South African economy to improve.
Yeah.
When we came again, we pretty realized that there were many internal opportunities to run the business more efficiently. We put the right team in place. We clarified the targets to the team. We engaged with all team, explaining why we needed to change the way we were running the business. And I think that was the beginning of everything what we are seeing today.
Yeah. Well, talk to me then about what will be crucial for you to extend the runway on margin expansion, particularly with intensified competition, and also as much as you talk about cost discipline, you still talk about some input cost inflation pressures.
Yeah, but I mean, it comes to the same. I mean, all the wins that we have seen in the results today are mostly related to quick wins, meaning general expensive costs, meaning some quick win in logistics, savings, meaning some improvements in our operations and supply chains. But it's still a lot of room to improve.
Okay.
And you know, when you start to change the way you operate in an industrial environment, that takes time. You are not going to be able to do in 1 year. So today we are receiving a lot of comments on how is possible that we are delivering in advance. Matias, have you been very conservative in the past when you engage with the market? What I think is that we were a little bit surprised that we were able to deliver these numbers so soon.
Okay.
I'm not going to lie to you, but I think and we strongly believe that there are a lot of opportunities ahead. We need to look at our clinker incorporation. We look at how we run our productions in our cement plants. We need to look at containing more our fixed costs than what we have today. So there are plenty of opportunities to run this business even more efficient in the years to come. And of course, sorry. As you know, we have announced the construction of a new cement plant in the Western Cape, and that is going to be a completely game changer moving forward.
And is that also a function then, because you talk about the changing the way you operate, is that also a function then of an evolving landscape in the broader cement market, where there are key trends that you are working around and having to adopt?
Well, I mean, what happens usually in the cement market when the sector does not grow, people start to get impatient and just look for volumes and market share, and they don't look for efficiency. You have many examples in South Africa that is the beginning of the end, because you start to look for market share, your margins start to drop, your working capital is not enough to running properly your operation, and so on and so forth. So what I mean is, like, what we defined when we came is that we were not going to run after market share at all cost. First of all, we are going to become more competitive. By becoming more competitive, we were going to bring the margins back, like it's happening. And once we are really competitive, we will go for the market share. We call our turnaround plan Awaken the Giant, but the name of the plan really is competitiveness, is to bring back competitiveness to PPC. In the process of being more competitive, we are going to see margin coming back and results improving. But the bottom line is to become more competitive, and at that time go to market share, not to run just for market share at all costs, because that will destroy your margins, your results, and it's going to become unsustainable.
All right. Well, thank you so much for your time and giving us more detail on those numbers that came out from PPC. Really, really encouraging to see a more refreshed and reinvigorated PPC. That was Matias Cardarelli, CEO of PPC.